Does this market have you stuck on the sidelines? Are you concerned with the wild volatility and just stuck in cash? If that's you, I don't blame you. I'm hearing from a lot of people that are in the same boat. What I'm going to present to you over the next few minutes is how there are still opportunities in this market as long as you have some defined rules in place that you're staying disciplined to. I'm going to outline that for you. I'm going to outline some key technical levels to watch for the rest of this week and walk you through what we're doing on our side to help navigate these challenging conditions. Now, we all know what's driving volatility. The conflict with Iran, the tricky piece about the whole situation is that these headlines are coming at all hours of the day and night. And they come out of nowhere. There's no set date and time that's being announced in advance that these headlines are going to hit. And when these headlines do hit, these are not just small 10-point S&P moves. They're 30, 40, 50-point moves in a matter of minutes. For us to move 30 or 40 points last year in the S&P, that would take a matter of a number of days. And now we're seeing it happen in a few minutes. That's making it very, very challenging for traders like us that we're focused on technicals. Right? We're looking at price action. We're looking at support and resistance. And it's not a market that's driven by those levels right now. It's really driven by the headlines. Thankfully, we are still seeing those technical levels come into play. It's been a really great stretch for us with our signal services. We've closed out of a number of winning trades here just this week. The last few weeks, we've just had really good results because we continue to stay disciplined to the rules that we have in place. We're staying disciplined to our system that we know has produced really consistent results in bullish and bearish environments, in news-driven environments, more technical patterns. The rules are there to guide every decision that we make, right? Now, if we take a look at the S&P, even though it has been very news-driven, look at this daily chart. And look at the past week or so. Look at where price has been stuck, right in and around these moving averages. Right? So even though we've had headline after headline, look at the key level that's held 3 times on the upside. The 200 period SMA on this daily chart, 661.25. We tried to test it 3 different times over the past week, and every time price stalls out right there. We clearly know the level that needs to get broken on a closing basis. Playing into the bull's hands here is if we do start to see a close above that level, everybody is leaning short. Everybody's expecting this market to head lower. If we see any type of positive reaction to a headline, you close above that 200 period SMA, now you get some short covering. And you get one of those powerful bear market rallies. They can happen in a hurry. They can be big, right? So you got to be prepared for that. But in order for us to get into more of a trending type move on the upside, at a minimum, we need to see a close above that level. So 661.25 is the area on the upside. On the downside, we've got 650. That's the low from yesterday. And then we've got Friday's low as well, down at 644.72. Those would be areas to watch. If we roll back over to the downside, we'd want to see if we can get some support levels respected there. Now, what's the next catalyst to get us moving away from some of these moving averages? Well, we've got the president speaking here this evening. We have the potential for more Iran headlines overnight or tomorrow morning. There's no shortage of catalysts there. We're also going to head into earnings season over the next few weeks. And even if we start to see the conflict settle down, then the focus shifts back to what the Fed is going to do with rates. Are they going to raise rates to try to fight the sticky inflation? Are they going to try to lower rates to save the slowing economy? We're in a very interesting stretch. The Fed is backed into a corner here. So I bring that up because even if the Iran conflict settles down, the catalysts are there to keep volatility very active. How do we react to that? How do we prepare for an extended stretch of volatility? Well, if I take a look at the VIX, let's switch this symbol over to VIX. And if we take a look, let me zoom in here. You can see that we've been in the 20s for the last few weeks. The only time we really start to see a long duration stretch of the VIX at elevated levels is around some type of a news event. It could be the pandemic. It could be the tariff scare. Now we're in the Iran conflict. So you've got the VIX elevated. You've got all that fear premium being priced into the market. And I've heard from so many people are saying, I want to be careful with this market. I want to go to the sidelines. Obviously, everybody has to make their own decision on what they do. For us, we want to try to capitalize on anything the market throws our way. In a period of high volatility like we're in now, I want to go to the more forgiving trades. The trades that are going to be a better use of my capital, lower my capital requirement, and give me multiple ways of making money, just in case we start to see that choppiness continue and we see the back and forth without the trending type moves. And what I mean there is I want to try to sell more credit spreads. Once we start to see price break away from these moving averages and we start to see these trending type moves that are lasting a couple of days versus just a couple of hours, then that's the green light for me to add in more long calls, long puts. But I would say 90% of the trades that I'm taking right now are using credit spreads. It takes advantage of the high VIX. It gives me 5 ways of making money with a credit spread versus just only having one way of making money when buying an option. So that's one way that we can adapt to the current conditions. Highly recommend, whatever you do, keep the size in check. The people that I've heard from that are struggling in this environment, in most cases, they're trading too big. And when you put into context what's going on right now, I just mentioned it a few moments ago. Last year, it would take days for the S&P to move 30, 40 points. And now it's happening in a matter of minutes. Risk can happen very, very quickly. You get caught on the wrong side of one of those moves, it gets painful much quicker than what we saw last year. Keep the size small. I encourage you to stay active in this market, but just keep the risk small. Don't let it get out of hand, knowing that out of this movement will come more of those trending type moves that we can all ramp up our aggressiveness with the long calls and long puts. So what does that look like? Well, let's go over to the trade page. And I'm going to walk you through a trade that we just closed out of this morning. This is our overnight pop trade. And this is based off of our hourly chart. On the hourly chart, we were looking at some potential energy being released on the upside. If we go back to yesterday's session, we had our red entry dot right here. So it had us in bullish mode in the very near term. Right? And on this hourly chart, I'm not looking to call a major market bottom. I'm not looking to say, hey, the low is in, we're going to rally back higher over the next 2-3 months. I'm looking at what's going to happen over the next 24 hours. I'm looking for an overnight trade where I can open it just before the close and exit out of the position the following morning after the market opens. So what we did yesterday afternoon, we went to SPY and we went ahead and sold the 650, 648 put credit spread. All that means is I'm trading two options at the same time. I'm selling the 650 put, I'm buying the 648 put at the same time. We opened it yesterday afternoon, right around 3:50 p.m. Eastern, 10 minutes before the regular market closes. The index ETFs actually trade till 4:15. We have an additional 15 minutes to get this trade on if we wanted to. So we collected 60 cents or $60 per spread. It tied up $140 of our capital per spread. And the beauty here is I had 5 ways of making money. Up, down, or sideways, as long as price stayed above 650, I made money. I made money from the time decay adding up and from volatility decreasing. It's a fully risk-defined trade. I can't lose more than $140 per spread. And the nice part about this is when I put this trade on, it's not that I'm throwing all my eggs in one basket. I'm not looking for this one trade to be the end-all be-all for the next couple of weeks. I was just looking for an overnight position to see if we can book a nice profit at the open. I had 5 ways of making money, so I wasn't trying to time the exact bottom. I wasn't concerned with that. I was just concerned with price staying above 650. Now, clearly it did. And we did get a rally up overnight. We actually closed out of this position within the first 60 seconds of the session this morning, closed it out at 10 cents. It gave me a 36% return on my capital overnight. Fully risk defined. It was right around $150 of profit if you risked $500 per trade. So now I'm looking at booking a nice profit. I'm not tying up my capital for weeks on end. I'm not trying to predict when that big trending type move is going to develop. I'm taking what the market's given us. Right? I'm keeping that risk small. I'm keeping that defined risk in place, and it gives me a very forgiving trade. These are the types of positions that we're trying to capitalize on. And so far this week, we've taken 2 of them. Right? We passed on the trade this afternoon. We didn't take one this afternoon because the president's speaking here this evening. But so far this week, we've already closed out of 2 of these for a 32% return and a 36% return to start the week. And these are the types of trades that I'm looking at 3 to 4 times a week. trying to take advantage of these very short term overnight moves, not tying up capital for a long time. And also, I'm not tying up a lot of time throughout the trading day either, right? Because I closed out of the last two trades. Both of these were closed out right at the open within the first 60 seconds of the session. Book the profit, move on with the rest of my day. So this is just one way that you can take what the market's giving you, take advantage of the high volatility, sell the premium, sell the credit spreads, give yourself 5 ways of making money. That's what's going to allow you to get through these stretches with your account moving in the right direction. And again, out of this movement will come a more conducive environment for the trending type moves where I can hold for a couple weeks at a time. That's the nice part about trading options. If you're only buying calls and puts, highly recommend that you consider adding in the spreads. It makes a huge difference in these types of environments. It gives you more to go to, more to work with, and adjust to conditions that are changing ongoing. Now, if you're looking for more information on this style of trading, go ahead and click on the link in the description of the video. We do have some free resources there that you can take a look at. You can download that ebook, and it'll outline exactly how we're trading here, how you can utilize these different strategies to put you ahead in these types of markets. Don't fall into that trap of getting frustrated. There's opportunities there as long as you stay disciplined to a system. So go ahead and click on that link. We'll get you those free resources to help you out here in the days ahead. If you have any questions here, feel free to leave a comment on the video, or you can email us info@netpicks.com. More than willing to help out there. So please go ahead and click on the subscribe and the like button here on the video. That really helps us out. And we'll be back with you over the next few days with our next round of videos.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk